I'll start the recording. Alright, so how are you guys? Good morning, good evening. I hope my voice is improving a bit and you can understand better what I'm saying. Getting slowly better here. Thank you very much for asking. So the market is back to moving. It seems, and there are several interesting things we should go with. So the first one is basically the Canadian pairs. The majority of them, the New Zealandian Canadian was the main one that made a breakout here, and straight continuation gave us the okay. Once again, regular divergence turned to be fake convergence, turning to be real convergence. Our idea is still the same: sell, sell, sell. And our invalidation plan at this moment is, of course, this high. Only break above this high will invalidate this plan, because if it breaks it, it might be something like a bigger double cycle into something like that before the next crash. But meanwhile, the idea was and remains bearish. There are no reversal signs, no false breaks, not on the 4 hour, not on the 1 hour, no convergences, anything like that. Straight continuation further down. The Euro Canadian joined the celebration, I would say. No, we don't have any valid false breaks on the 4 hour chart, but we do have the hold of the classical double wave correction. It reached exactly to the 50% retrace of the previous cycle and to the 100% duplication. In terms of candles, we are around 40 candles here and around 40 candles on the second leg. It's a 50% of the previous double cycle. Amazing magnet zone to provide us sales. What happens now in that situation? The big double wave breakout would give us a very good conservative sign for a sell. The current breakout gives us okay already for a moderate sell, right? Which simply means lower risk. That's the whole idea. That's the whole difference, right? Now we got the breakout happening this morning. Finally, our invalidation is here. And with the strategies you use, our idea was and remains bearish for the longer run. Invalidation turns to be this high. Same with the pound Canadian, which maybe is the pair I like less, because it does not have any clear cycles from weekly and daily, so I like it a bit less. But all the divergences, the last divergences, are bearish, and it starts from the daily 4 hour. If we break below the lows, we start to create some convergences. So the idea would be basically becomes the same. We do not want to go and overexpose everywhere, but it is definitely another one to pay attention to. Cat franc might be a bit different because it's the only one that did not reverse for the long term. So far, still holding 2 candles of the daily. So we still treat it as a short-term retrace before very possible last move down and the rally. And this rally, the short rally, might last until the moment that these two get bearish hidden divergence. Okay, so the correction is still here, still valid, and if we try to break it like up to where all that could take us to, so 161.8 could be the first place, 261.8 could be the next place in the depths of the correction. So the short-term corrections for cat franc are here, but it's not a long-term reversal yet. We don't have not false break, not 3 waves push, 2 waves break correction and a breakout yet. Therefore, we treat it as a short-term retrace on CAD versus the yen. For the long term, we are still bearish here inside the channel, so we want to see and sell the rallies. No weekly divergences to prevent any of these scenarios. However, the short-term correction is now become acceptable and valid. Here is what we deal with. We got the duplication of this area, of this cycle. The second leg by itself is a cycle that takes us to the 100, are my levels here, 161.8. Therefore, the correction up to 38.2 of this cycle and possibly 38.2 of the big cycle, which is here. This becomes our corrective zone. Corrective up to there is still in a very big possibilities. On the 1 hour chart, we got the double false breakout, which we first of all faced in the previous move, then we faced one right here. We got the idea of the higher highs and convergence principle following. Now it starts to be higher low, higher highs, and with that the bullish rally expectations. Once again, we treat it as a short-term retraces possibilities due to the fact that weekly, not daily, anything to stop that from a possible continuation. So we treat it as a short-term only currently. That's for the Canadian pairs, which are the most relevant. Dollar CAD is the only one which is kind of stuck in nowhere. So we don't want to trade these conditions. They are simply not clear, and I would not be surprised if dollar CAD would be the one that will lead us for one fake high, another fake high, or anything like that. The majors are the ones that react faster to the Canadian change currently. Any questions at this stage, guys? I wanted to start with that simply because they are the most relevant ones and the most interesting ones currently. Saying that, that leads me directly to the oil, because oil and CAD are very well synchronized. The idea of the oil for us was bearish if we manage to break the trend line. Since we don't, our warning sign, as we have been covering on the live rooms, would be the go above 61.8. The go is straight, and we are getting further and further and further, which means the sell currently is not relevant. Bringing the possibility of the 161.8 back on the table, and this 161.8 lies in the area of a bank zone, which we have here, and we have slightly higher in this area as well. So the possibility of further move is on the table. We don't have any reversal signs, not double top, not divergence completed, not lower lows, no convergences, no trendline breakouts, no 3 waves down, 2 waves up, and breakout on the lower time frame. Therefore, oil currently is back to completely acceptable for both directions, with the current momentum remaining to be bullish and with the possibilities for us to go for the second false break. In terms of the false breaks, I want to remind you, this was the first false break on the weekly chart. Take a look on the distance of it here. If the second false break goes, we accept the distance to be pretty much the same size, which means this would be the area where we would expect it to happen. So the longs on the short term can provide some good rally here. So oil currently on a short term remains bullish. Both directions acceptable since we don't have any long term cycle in play. The 161.8, which is still getting close, that's what makes it pretty much short term opportunity. Okay, so this is for the oil, which related to the Canadians. The next one on the list is the gold. Gold, we got yesterday the first possibility for a false break, never completed yet. Therefore, our gold plan was and remains sell the rallies on the short term. For the long term, after we got the reversal, we got the okay for switching to the buys. Next one on the list, Australian versus the franc. We are stuck in the range. It is a weekly triangle, and which is also well seen on a daily. We can of course call it also a horizontal range here as well. This is also a structure of a daily megaphone pattern. When we are now right on the middle of the way, holding the beautiful support of 073. Taking a look on the cycles, we are facing 61.8 and a possible double triple bottom on this area, and 161.8 of the 4-hour chart push here. So that brings us to the same zone on the 4-hour. Just a second, guys. On the 4-hour chart, we got ourselves finally the false breaks, and we get ourselves the convergence principle. We don't have any real full convergence completed or came in play. We do have a last trendline breakout. We do have this trendline breaking out, and we of course have the full trendline breaking out as well. So basically, Aussie franc turns bullish with this invalidation. By retraces, the best case in that would be to go to lower time frame and start to look for formation here. Two waves, bullish hidden divergence, range, any kind of a bullish setup would give us a wonderful okay in that situation. It's very important to put the invalidation on the right place, and this is our scenario right here. This is our invalidation area. Break below that could make a further move down. And that's why we are currently short-term invalidation. Short-term target 38 to up to 50 of the 4-hour chart cycle. This would be our place. Later on, we would see how the momentum goes. So Aussie franc turns bullish for us. Kiwi dollar did not manage to break the trend line we spoke about yesterday on the short term, meaning remaining bearish for us. We are aiming 067, 066 on the daily chart. Aussie Kiwi, after breaking yesterday's channel, finally make a beautiful triangle. Finally making a very good continuation for us. Again, nothing changed here. Everything remains just a follow-up. Okay. The one that we do need to pay attention to is the dollar versus the yen. Dollar versus the yen still holding this and still holding the channel. Inside this dropping channel, we got a bullish divergence here. This bullish divergence was well supported by the beautiful of the delta, Jordan's delta, which means the MACD momentum. That brings us to the possibility, as we discussed yesterday, break above that with very big chance, turn that once again short-term bullish to the second leg of the daily, which is this and this. Okay, with this divergence to be developed. So we must pay attention here. If it managed to break it, it is short-term bullish before the sell-off takes a gain. Euro versus the dollar, short-term buys as long as we are above this area, but we must get the setup. As explained yesterday in the live room, because we don't have any clear two candles rule on the way of the first channel, and we don't have two candles rule inside this correction, we must play aggressive style. Aggressive style means we got a second leg right now. We must get it broken, and then we apply the principle of second confirmation. So double confirmation. Why? Because it's aggressive. It's a short term and aggressive style. Therefore, double confirmation. So we would want to see the trend line broken. We would want to see pullback in 2 waves and another breakout, or at least a bullish hidden divergence created to hint a continuation. Okay, so euro dollar on the list, invalidation is here. Okay, pound dollar was and remains bearish for us. We are aiming 130, 128. This would be our area, and this would be the place where we would want to buy. This is the first false break. This is the length of the second false break. This is where we would want the divergence to form and to start to see the reversals happening. Meanwhile, it is still bearish. Pound versus the Aussie. This pair is on the list. We are here dealing with the range. Break below the range, creating lower lows, and break of the trend line would basically give us the okay for further possible continuation down as we wanted. So I showed it not because the setup is completed, I showed it because it's happening. And we need to pay attention because it could happen any moment. And we better remember that and pay attention to that once that happens. Euro pound, nothing really changed for us, so no real trades for us. The only trend line we currently have is still this, which means we can't really trade it. For aggressive style, we can start paying attention for the range. I would be careful here because the daily looks like it might easily, finally, make the breakout, taking us to the top of the channel once again, 089, 090, before the sell take place. So I would be more accurate and suspicious with the euro versus the pound. From all the setups we do have, this one is the less attractive, I would say. Euro versus the Kiwi has reached the 61.8, and as we have been talking yesterday, it's our time to start and pay attention for possible reversals. The question for that has to be answered on the 1-hour chart. Do we have two false breaks in convergence? The answer is no, we do not. And therefore, the bullish continuation remains. If we don't have the reversal signs, the main trend remains. 100 turns to be the next possible zone that the Euro Kiwi is heading towards. Okay, so a lot of updates, right, recently. Euro versus the pound remains bearish for us with this invalidation. We do want and prefer to see the break of the trend line as a confirmation, but the pressure for us was and remains bearish for this pair. And let me just check my list. Oh, indices. German DAX completed its triple push, kind of, right? Something like that. We would definitely accept corrections. For us, the plan was and remains sell the runs, sell the corrections. So the deeper the correction we get, the easier our sell would be right after that. Same with the Nasdaq, which is forming for us what we want to see. Bearish hidden divergence would be ideal, but 2 waves or a range pattern here and a breakout would be definitely in play, acceptable in play here as well. And the cryptocurrencies, before I give the list for you guys, cryptocurrencies, Monero versus the Bitcoin is the one that basically we are in, together with the Monero itself. Where is that? They are the only ones that gave us the okay for bullish sign. The rest simply not there and not ready yet. So that's from my side. A lot of updates, but interesting updates, interesting scenarios happening on the market. Anything you would like me to cover, guys? Anything that you want me to go over, update, explain? It's your time, guys. I remind you, if you would like to get the microphone at any stage, just let me know. We're completely interactive. If you would like to share your chart, ask your questions with the microphone, just let me know. Completely interactive here, guys. If there is anything you would like to go over, please let me know. OZK will remain bullish for us. OZK will remains bullish for us. It never managed to break any of the trend line, any lower low, so the long term remains bullish. So if you are in, the plan is unchanged. I would make, as I explained here, with the two waves and divergence, at least to break even. If your management accepts anything of the partial cash out, that's good conditions, definitely. But for the long term, our plan was and remains still higher. Okay, so if that's all, guys, then thank you very much for being here. I wish you a wonderful day and happy trading continuation. I'll see you in the Telegram groups, of course, a bit later. Enjoy your wonderful day, and we meet tomorrow. Tomorrow it's a bit earlier, guys, so please follow the hours in the calendar. Okay, thank you very much for being here. Have a wonderful day. See you.